on Sunday 11th of January 2026. Let's go straight forward up to what you are actually looking at. Now, first of all, we need to go to check actually what happened for the last week. Last week was the market was kind of slow. We were expecting for the NFP data, which is actually I'll be covering it very soon. So remember to keep watching. Now, for you to understand actually what I'm looking forward when I will be reviewing last week price movement, you can consider going and watch the previous weekly outlook. The link is above here. I will have the link there. I hope the link is already there. Go and watch that video. Now, as from the previous weekly outlook, we said that we are looking for bearish USD, for the bearish USD, and then we were waiting for the price to push all the way down from down here up to this position, whereby we have probably that kind of a supply zone, then continue to the downside, as the Fed is looking forward to have the interest rates cut 2 times in this 2026. Yes, on Friday the labor market seemed to kind of bring what you call mixed environment, whereby it might stand in between the cutting of other interest rates cut when it comes to the policy makers in the United States. Therefore, actually for now, when it comes to buyers on the dollar, it's kind of mixed up. So I'll be looking forward for the CPI, that is an inflation data, which will be coming out next week. And therefore, this is actually something which I'll be paying much attention to. If the inflation data comes out with the surprise, if the data happens to come out with which is a decline, if the inflation happens to decline with the surprise, we might expect the price to push to the downside up to that position. And if the inflation keeps on shows some kind of push or maybe an increment, we might expect the dollar DXY to push into that, then have a retest, then we can look forward to trading into that zone. Remember, this video is not a financial advice. This is just my opinion. This is just my outlook. You can consider doing further research, and also you can also consider doing your own due diligence before making any decision in trading, since trading is very dangerous, is kind of very risky, and can lead to you losing money. Now, first of all, let's get to the outlook, which we shall be looking at. I have already given you the outlook that we were looking for the dollar to push into this position, whereby it happened. And actually, what you should be expecting next week is we shall be waiting for this inflation, that is now the CPI, to see what will be actually be doing. Anyway, I go by the name of Kelvin, and I'm a currency trader and a trading coach at RatePulse Market, and this is what we do daily time. Anyway, all the time. So therefore, that is now the dollar. Something else we shall be looking at. Let's first of all cover what we call risk sentiment. Since they opened to this year 2026, there was a time I just asked whether we are going to have the risk off or the VIX index kind of pushing to be above 20%, which is actually the risk off. Unfortunately, it's not yet into that position. The reason why I was asking that is because we have a lot of geopolitical tension which is happening. So when it comes to geopolitical tension, you need to understand what kind of a currency or what kind of an asset are you trading, and whether it can be affected by the geopolitical tension. Right now, we have a lot of geopolitical tensions which are taking place. We have the president of Venezuela being kidnapped by the is that the right thing? Be getting what? Kidnapped? I don't know, but the headlines were reading as kidnapping. Anyway, we have a lot of we have now the issue about Greenland. You can go and do research Greenland acquisition, so you can still go and look forward and do your own analysis towards that. Now, let's cover something else. Now, when it comes to, we can see that the risk off, you're still on the risk on. It is not yet into the risk off, and that tells you that the things that happened actually is that whenever we have the risk on, the dollar tends to be performing way better. Unfortunately, we are yet to experience that. Now, something else, that is now the DXY. I have already told you when it comes to the dollar, actually what we are looking forward. We had the mixing of the labor sector. The labor sector, this is what I'm talking about, anything related to jobs. Yeah, we had the JOLTS coming out weaker. We had the NFP coming out weaker. And when it comes to unemployment rate, which showed some kind of an improvement, and therefore bringing what we call mixed up environment, and we might not see the Fed further interest rates, but we are yet to experience that. We should remember, in trading we don't predict, we actually react, and therefore it is not as straightforward that you should be looking forward to go and sell the dollar right now. No, we should be waiting for the data to come out, and come out with a surprise. Then you can have your execution done. Now, having said that, let's cover something else. Actually, if I was to go and look at the, let me just go towards and to the euro. So the dollar is that simple. On the euro, it is quite the eurozone seems to be in a very good condition, whereby the inflation is at 2% actually, which is now the European Central Bank target, inflation target, which is almost 2%, and then everything seems to be in good control. Now, when it comes to, let me just go and check something on my email. There's this what we call the fundamental summary, which is now the RatePulse, which is like I do it on Sundays, especially on weekends, so that at least this is only to cover what actually happened last week, and this one will be giving you a very good vibe. Now, when it comes, let me just go back to dollar. To dollar, you can see that we have this is USD, and then we have January. So on the labor sector, we had the ADP coming out at 41k, whereby the forecast was 49k, and therefore it brought up a decline with a surprise. And then when it comes to JOLTS, we had also a decline, which was supposed to be, the forecast was 7.6 per one. Unfortunately, the actual right now is 7.15, which is a surprise also. Unemployment claim, which came out a very good improvement, showing that the unemployment rate is actually improving, and therefore this is something you need to understand. Even if the unemployment is actually showing some improvement, it is still very high unemployment, and therefore we should pay much attention to that. Now, that is now the dollar, and that is now we expecting. Now, when it comes to something else, economic growth, let's check on the average hourly earnings. This depends on how people are getting paid, and you can see that there was no surprise, but there was an increment whereby the previous one was 0.1%, and then right now we are reading at 0.3%, which may lead up to what we call disposable income, something called disposable income. Remember, this is how the environment, the inflation tends to be reacting to. If we are going to have people getting paid better, it means that people will be having what we call disposable income, and then they will be having what we call greater purchasing power, and therefore we might see that kind of we should be seeing inflation kind of affected in one way or the other. Anyway, let's continue. So I'll be paying much attention to CPI. Remember, you might be wrong, you might be right, whereby you say that there will be disposable income. So the CPI should show some kind of slight improvement, but that is not always the case. So we should be trading whenever the data is out, but not trying to predict rather than to react. Anyway, let's continue. That is now the dollar. If we were to cover the euro, it is quite simple. The last week, what came out, it is quite simple what came out. When you go to the euro, if you need this kind of a document or this spreadsheet, I will still send it to you. Let's go to the euro now. These are the only pairs which I trade. I only focus on USD, dollar, Japan, euro, then UK, and then the Switzerland. Now, when you go to the euro, the unemployment data last week came out very well, showing some slightly decrease, which was now the focus was supposed to be the focus was 6.4%. The actual is right now at 6.3%, which is kinda showing some improvement in the Eurozone, showing that unemployment is actually cooling, is coming down. And therefore, the other thing that came out last week is that the final service PMI, that is now the final service PMI, which came out at 52%, 52.4%. You need to understand, when it comes to the PMI, it is measured. Something below it is measured is a measure from 0 to 100. Anything that is now anything less than 50% shows some contraction. It's not healthy for the economy. Anything shows that shows above 50 is an increment, is a very good, is an expansion, which is interpreted as a healthy for the for the economic growth, which is good for the currency. Now, the final CPI, which is an estimate, which came out at 2%, which is actually within the range of European Central Bank, and that shows that the economy is kinda in control. And therefore, if we were to go and check on the euro, you can see now the euro index. It has been there was a time if you need to go and watch, consider going and watching the what? Go and watch the previous weekly forecast, whereby I was interpreting this. I was kind of giving a forecast on this, outlook on this, whereby I was saying that we are having that time the euro was around here, and I said that we expect the euro to drop into this position, and from here we will see maybe a push to the upside. And this now I'll be paying much attention to next week. Next week there's nothing much to pay much attention to. Next week, but one, we shall be having the final CPI, which will be yearly to yearly, and that now can give us a direction towards what is the European environment looking like. Now, for that euro, I have already told you that right now everything seems to be in a very good condition, so we might expect the euro to push to the upside, and therefore this is where I should be looking forward to buy euro. Now, something else, let's go and cover Japanese yen. It is quite simple. If you remember last time, if you go and watch this video, yeah, the link is above there, or the previous, or if you happen to go and watch the last weekly outlook, we explained this, and I said that on the Japanese yen, seems to everything seems not to be in order, whereby even the government is saying that there might be what we call an intervention. So most of the people, we are looking for that kind of intervention, and therefore that time the price was actually around here, and I said we might experience the push to the downside, to the upside, before going to the downside, and unfortunately that didn't happen. It happened to push, but we didn't get into this kind of a supply. Price happened to reach into this position, and then we went straight forward to the downside. So on the Japanese yen, I'm still bearish on this pair, regardless of the government saying signaling an intervention, and the Bank of Japan signaling a very good tightening of the monetary policy. So I will be looking forward to that. Something else, I will be giving quick summary. Something else on the Japanese yen, next week, I'm paying much attention to next week rate, to the next week. Next week we don't have any interest rate release, so there's nothing to pay much attention next week. But we still have, I think, 7 days, not 7 actually, but around 12 days to the interest rate decision, and therefore I will be paying much attention to that, and the price right now might be playing, or the price may be pricing based on the interest expectation, and therefore the expectation might right now, since the GDP is falling, inflation is also falling, unemployment rate is very high. They are looking forward to tightening their policy makers monetary policies, and therefore it tells me that the market may be doubting on the interest rate hike when it comes to Japanese yen. And if they will be hiking the interest, we might have a dovish Japanese yen, so we might expect that break to the downside, then come for a retest, then moving forward for the downside continuation. Now for the Japanese yen, it is straightforward. If we were to go for the Excel sheet, which I usually prepare, then the Japanese yen, you can see very well, average hourly earnings came out at 0.5%, which is a decline since the forecast was at 2.3%. Then on the PMI, that is now final manufacturing PMI, came out at 50%, 50.0. This is supposed to be 50 actually. Yeah, 50%, which shows the actually the PMI is in the expansion. So I'll be paying much attention to that. Something else we should be covering. So for this one, let's go and check on the United Kingdom. On the United Kingdom, if you happen to go and watch the previous weekly forecast, we said very well that we should be expecting push the price to come from this point of supply zone here to the downside. I explained to that, and then I gave out the reason. Let's go and cover what actually happened last week. If you happen to go on the GBP sector, you can see very well. Was there anything that came out for the GBP? Let's check on the UK, because I have written down. Oh, the data is not yet filled. Sorry for that. Okay, let me just read what we have. You can go and let's just go and check. Yeah, you can go and check on the Forex Factory, and then you will come to understand that last week that is now final manufacturing PMI came out at 50.6%. Let me just go and have it. Let me just go and have it on the Forex Factory. Actually, this was, I think, last week but one, whereby the final manufacturing PMI came out 50.6%. Let me just go filter. I think this will be taking long, but anyway, we are here for the what? Let me just go in the mark and then have United Kingdom, GBP, and then final filter. You'll come to, this is today. There's nothing today. Let's go and check. But you can still go and check. But let me just go, to avoid the video being so long, let me just go and read straightforward. We had the final manufacturing PMI, which came out at 50.6%, which is also about 50%, which is indicating an expansion. So that is something we need to pay much attention to. The final service PMI also came out at 51.4%, which is also an expansion. But when you check on the GDP and inflation, we actually seeing that both of them are decreasing, actually going down, and therefore we might have what you call the interest rate cut, and that's the reason why I said we might expect the GBP pushing to the downside as the price did for that week. Now, something else we need to cover. It is very crucial to pay much attention to what will be happening next week. Actually, next week, nothing to pay much attention to. What I will be paying much attention to is what we call GDP. GDP. Next time I will be having my Forex Factory in a better formation, or maybe well structured, so that at least we don't have to waste a lot of time on these videos. Anyway, on the GDP, I will be paying much attention to if the GDP happens to come out lower, if the GDP happens to come lower with surprise, I will be looking forward to be continuation of this downside of the UK. That is now the sterling pound, maybe up to this position, which is the previous into that level, which is the previous resistance turned now into support. It is quite simple. Something else I will be paying much attention to. Let's go and then cover the Swiss franc. I will be giving out on the Swiss franc. If you remember very well, last week I said very well that I'm looking for bearish CHF, whereby I was looking forward for the price to get into this zone, then keep on dropping, and this is actually what happened. The reason for that is because the GDP is falling, inflation is dropping, and we might also continue seeing the prices keep dropping. Now, the last week, if you happen to go on this, I think this one it's already filled. Yes. Then on the last week, the CPI actually came out at 0.0%, which is an increment, and therefore we might also see some stagnation before continuation to the downside here. But you should pay much attention to what the bank of the Swiss National Bank is saying when it comes to this. Now, a very quick recap on the dollar. This is a very good quick recap on the dollar. This is actually how the price is performing, and then right now we can see we're in a very good supply zone, and we expect the price to push to the downside. But the price being on this level doesn't mean doesn't guarantee you that we might see the push to the downside. Since next week we shall be having a very crucial data, which is now the CPI. If the CPI happens to come out with a surprise, that is now, if it happens to come out below the forecast, we might see the price what kind of pushing to the downside, like as that. Now, but if the CPI happens to come out positive, we might also see a break to a retest before that continuation to this level. So that is now the United dollar. For if you are to go for the euro, it's quite very simple. We expect the push to the upside since the euro is in a very good condition, controlled environment. On the Japanese yen, it is very weak on the, regardless of them signaling tightening. We might see the weakness of the Japanese yen pushing to the downside. The most important thing we shall be paying much attention to is what we call the intervention, if there will be any kind of intervention. Something else we should be looking at on the United Kingdom, it is quite simple. I am expecting the price to continue to the downside. I'm expecting the price to continue to the downside. But when it comes to the GDP next week, the data might also bring something else, whereby the price might also get into this position, then push to the upside. So we should pay much attention to that. So you should pay much attention to the data which are coming out next week. Something else on the Swiss franc. Swiss franc right now, I'm expecting the price to continue to the downside, but due to the geopolitical tension, the Swiss franc might be supported. Yes, that is now quite very simple. Let's go and cover some updates on the trades that we took last week. Let's go and take the updates. Allow me to cover, if you have not yet watched, just go and watch the video that is all about the trading journal. Yeah, my first trade. So the first trade was GBP JPY. Actually, we did the breakdown. And right now we are currently floating in massive profits. But remember, this is not a financial advice. I repeat again, you should do your own due diligence. If you need to understand how I broke down this trade, go and watch this video. I think I will be having the link on that section, on that place. Now, go and watch that video whereby we were targeting the first take profit, and you can see very well the price went and smashed the take profit number one, which was the previous high, which was around here. You can see the price went and smashed that point. Now, remember, after taking out, or maybe after, let me just check. Yes, now, after, you have to understand that I took out, or I closed some partials, and the trade that I'm currently running is still in the BE. I have already set a BE. So, that is now the update on the trade on the GBP JPY. I'm hoping if the continuation, if the United Kingdom, these datas, you might pay much attention to the GDPs, yeah, to the GDP that is coming out from the United Kingdom. Yeah, so we might see the price pushing. And remember, on the daily time frame, we still have unfilled or unmitigated demand zone. We might see the price pushing back into this zone. So we should pay much attention to that. Now, the next trade that we are going to cover is on the Euro Japanese yen. We covered this trade, very quite simple. I explained the reason what I was like, how I was doing it. Now, get to understand. I did the breakdown and I explained why I was taking this trade immediately. We were waiting for the price to come back into this zone after knowing that this actually the risk was kind of way bigger. But due to what we call the fear of missing out, I just executed two trades on the Euro JPY with the proper risk management, and then this is how we are actually performing. And I'm expecting that the price will be pushing to the upside, since on the Euro we don't have much attention, we don't have much thing to, like, the data to watch next week. Yeah, so the market will be obsessed majorly on the Bank of Japan, interest rates. Yes. Now something else that is now the trade that we are talking about. Another trade that we took is on Euro USD. Actually, this trade right now we are in a drawdown. We are in a very good drawdown. And if you want to go and watch on that trade, go and watch on the third trade that we took, the third setup, how we executed this and how we did the analysis. Yes, so here is the thing. So if the price happens to open on Monday and then goes for the stop loss, it is quite well and good. Sometimes in trading you need to, you'll have to hit your stop loss regardless of how smart you've done your analysis. Yeah, so sometimes the market will not favor you as that easiness. Therefore, we shall be watching on the Euro USD. And if we happen to hit our stop loss, we shall be paying much attention for the next execution. The next execution should be coming out on Tuesday, when we shall be having the USD CPI, all inflation, coming out, and see how the price will actually perform. I'm expecting that, I'm hoping that, or this is my expectation, we expect the price to push to the upside. Simple as that. So having said that, we can consider calling it a weekend. And having said that, I think if you have any kind of a comment, or maybe you need me to do some improvement, you can also consider dropping your comment and how best we can get to help each other. I go by the name Waweru Kelvin. I'm a currency trader and a trading coach at RatePulse Market. I trade from the idea that the price in forex market do not actually move randomly. This is not a game. This is not an algorithmic game. This is not a game. It's all about economy. You need to understand how the economy in different currencies in different countries are performing, and then when compared to one currency to another currency, which tends to perform way better than the other. So I go by the name of Kelvin. I'm a currency trader and a trading coach at RatePulse Market. You can reach out to us in the comment section, and also you can have our email and send us the email, and then we're going to respond. If you need this kind of a data, this weekly Excel sheet, or maybe you want to be taken through on how to do it, you can consider reaching to us, and then we shall be having you taken through, and then you can have a better trading experience. Having said so, consider to like, subscribe, share, and also comment, and see you guys next time.